Hello guys, welcome again. So in this video we'll be looking at the Gravestone Doji. So this candlestick is just the opposite of the previous candlestick which we discussed, the Dragon Doji. So again, the Gravestone Doji also has conditions. In this case there's three, and all three have to be met. Let's discuss the conditions. The first one, it consists of a single candlestick. Also it has a longer, in this case a longer upper tail or a shadow or a wick. Remember what is a tail or a shadow or a wick. What does it mean? So a tail is just a representation of price being rejected. That's how we form tails. And then the third condition is it has a non-existing body. As you can see here, the body is relatively small. So those are the three conditions and they all have to be met. Okay, let's look at the psychology behind the formation of the Gravestone Doji. What does it mean when it forms at certain areas? So the first one, in general, the pattern indicates a bearish reversal in this case, or a bearish momentum. Thus, it is most effective at the top of a trend. As you can see here, top of the trend, that's when it's most effective because we can get selling opportunities. But we'll discuss this more. And then two, when it forms at the top of a trend, near a resistance, let's say there was a resistance level here, it suggests a bearish reversal or a bearish movement, potential bearish movement, as you can see. So again, let me try to explain the logic here. Why does it suggest a bearish reversal? So from here, guys, as you can see, buyers are currently in control of the market. Tug of war between buyers and sellers. So here the overall momentum is bullish, but then we get this candlestick here at the top of the trend. What does it mean? It means that buyers first, they pushed up, but then sellers came in the market and pushed this candlestick all the way down, suggesting that buyers are now losing power. And if that's the case, that means we will start to see more of sellers coming in the market, pushing the market all the way downwards. That's what I mean when I say when it forms at the top of a trend, of an uptrend, it suggests a bearish reversal or a bearish movement. We can also use it as a sell signal at the top of the trend with other confluences, of course. So when you're analyzing and then you happen to spot a resistance here, you can use it as a sell signal. And you can also use it as an exit signal. If you are already in a trade, let's say you bought here, so you are in a buy trade all the way from here, you are riding, and then you see this gravestone near the resistance. The market is telling you that the upward movement is about to end. Buyers are losing momentum, buyers are losing control, and sellers are beginning to come in, and the market is about to reverse. The best thing to do is to take your profit, and not be greedy. But then if you don't understand, one will hold and you will lose everything as the market goes down. Again, the time frames to use the 1 hour, 1H, all the way to 4H time frame. That's when it's most effective. Okay, let's do some exercises. So from this chart here, I want you guys to identify the Gravestone Doji patterns. Again, think of the conditions and know where to look. We just discussed the Doji candlestick. It's effective at the top of the trend because it has a longer upper tail, meaning upper tail. So first, market pushed up and then got rejected. That's why we have that upper tail. So that upper tail signifies a rejection, a bearish rejection, meaning buyers lost power and then sellers came in and drove the market all the way down. So think of the three conditions, which is it consists of a single candlestick, it has a longer upper tail, and it has a non-existing body, and you know where to look. So you are looking at areas like this. This is where you have to look, guys. So pause the video, try to identify, and then let's see if you can. Okay, so this is where we got it from that previous chart. It was here after this upward push, and then we got this Gravestone Doji candlestick pattern, and then the zoomed one is here. As you can see, the conditions: single candlestick consists of a longer upper tail which shows bearish rejection, meaning buyers were rejected, hence forming that longer upper tail. And then the last condition is it consists of a non-existing body. As you can see, the body is relatively small. Okay, so the observation here is the pattern forms at the top of a trend. What does that tell you? And what do you see? It forms at the top of a trend. What does that tell you? The same thing which we talked about under psychology behind this candlestick. So if you observe here, price was being pushed up, meaning buyers all the way from here. Buyers were in control. Buyers were in control. And then we got this candlestick here at the top of the trend. This candlestick pattern, the gravestone. And then after we got it, observe what happens. The market starts to go down, meaning buyers now lost their power, and then sellers are now coming in the market. Because trading is just a tug of war between buyers and sellers. So you must know when buyers are losing control, when you can expect sellers, so that you can anticipate future movements. So open your trading view, try to identify these patterns, all of these patterns we've discussed so far. Send them through, you can send comments, everything, and then try to see how quickly you can quickly identify them. The more you practice, the more you get better with it. Thank you. See you on the next slide.